Guys, today I have one of my most important videos. This is a comprehensive video talking about everything I anticipated, exactly how I am trading for the foreseeable future. We're gonna talk about the long term. This is my trade I am starting to set up right now. Even though this is gonna take place over the course of several months, I'm going to show you my exact buy-in orders, my exact buy-in levels, my bots, the settings for them, why I believe that the market is going to behave in the way I think it is going to behave, as well as the things you need to be on the lookout for. And guys, this is a video I will be referencing a lot in my daily videos. So this video is going to contain everything, and it might be another month until I make such a video again where I talk about my long term until something changes. This video is my strategy, so I'll have everything covered in this video, so make sure to watch it from the beginning until the end. And what I will also say is that in my Telegram premium channel, I am going to give you an update whenever something changes from what I say in this video. If I change my mind, if anything else comes up, I am going to update you. In my premium Telegram channel, I've been keeping you posted. I warned you about BlockFi here as well before they went under. Make sure to join the premium Telegram channel here, which is free, to keep up to date with everything I am doing, because by the time you watch this video, maybe it's still relevant, maybe it's not, but at every single point I make a change or I change my mind, I will keep you updated in the Telegram channel. So let's talk about this. So for reference, guys, we are right now at the time I'm recording this video at $16,477, and my orange line is or my orange box is holding up the Bitcoin price right now very strongly. Now this doesn't look very strong, I have to be honest. This does not look super strong. It looks like this wants to go down lower, and if we didn't have this orange box here, we may have already started to go down lower here. So what do I believe is going to happen in the long and in the short term? Well, for the long term, if you are going to accumulate for a long-term bag, I don't think that this is a bad position to accumulate in, because I think that overall the macroeconomic circumstances, they are going to start to easen up a bit. And this is something, you know, I've been talking about for several months already, how I think that inflation is going to start to come down and that the market is going to start to slowly but surely turn around into some more bullish momentum. Now, one caveat: at the time I'm recording this video, we also are in the middle of the FTX crash. We're in the middle of the massive contagion happening right now for crypto. So when I post this video, we may have another big move simply because we're in the middle of this massive panic right now. Although things have started to settle a bit, we are yet to see the full extent of the contagion. But let's talk about this trade. This is the trade I am going to be starting to think about right now even. And this is actually the Bitcoin halvings. The green dotted lines are the Bitcoin halvings. Now, there's about 1 year and 149 days left until the Bitcoin halving. It's going to happen sometime early 2024. As you can see here, this is probably going to be faster. So probably it's going to be somewhere in February or March. But one thing I want to show, and this is one reason why I am saying that you should start to think even now about the next major trend to happen here, because we know that in after every halving, we do see the Bitcoin price go up a lot. The first halving went up 10x, second halving went up 40x, 8x. But what you can also see, guys, is before the halving, we usually do have also a big run up here. This is 1 year prior to the halving. So 1 year prior to the halving, let's take it from the beginning. 1 year prior to the halving here, we started to go up, and then after the halving, we really started to accelerate. And then right here as well, 1 year before the halving, we did have a massive run, and then at the halving, we had another massive run. And here we did go sideways mostly, but remember, this was the COVID crash. So this is a little bit of an outlier. But what I will say is that if anything, this is showing us that looking at the Bitcoin price 1 year prior to the halving, buying every dip has turned out to be a good thing to do, because usually after the halving, we do see a massive run. And also what I will say is that even more so probably the next halving, which is gonna be at this white line, because everyone now knows and everyone are basically anticipating the halving to be a major event for crypto. And I do think that the halving is going to lead into higher prices, but people know this and people are going to start to accumulate Bitcoin sometime here prior as we approach the halving right now, because we have a track record. Okay, we have every single halving, we do go up in price. So people will be buying, somewhere around here. So keep that in mind. This is probably going to lead into a decent run up into the halving. So this is why you want to be prepared right now. We're not that far from it. Remember, these blue or these light blue boxes, these are 1 year prior to the halving, and we are 1 year and 147 days from it. So this is the time to start to prepare. Every single dip, no matter what happens here, if we go any lower for Bitcoin, I will be a buyer. Buying Bitcoin even at these prices for the long-term bag is definitely something I am doing. And I do think that that is going to turn out to be a good idea. So other than this halving trade, what am I looking out for? Well, I do believe that we're going to have extensive periods of sideways volatility or sideways movement, sorry. And sideways movement, as you know, this is something we've been taking advantage of previously. We've been using bots on BitGet and on OKX, primarily on OKX, and all of the bots so far have all been closed at a profit. So the bots have been doing a terrific job of trading the sideways volatility. So in terms of my trading with the bots here, I do have two here on OKX. I do have one between 15,700 and 20,200. That is from this orange box right here at the bottom of the box up to this level up here at the orange box at 20,300. I do think there's a decent chance that we might, go sideways and have big swings, yes, but ultimately, trade in between this range. Now, that is granted that the orange box here holds. At this point, it's still holding strong, but we do know that we're in the midst of the FTX crash. And if this doesn't hold, then things change, okay? Things change if this doesn't hold. But for as long as we are above this orange box, which we are right now at, I do believe that this is the range to be trading at. And of course, the bot is going to do that automatically. Now let's talk about this. What would happen, or what would I do if we start to go down here? Okay, if we start to go down here, I don't mind that, because just like I showed you with the long-term trade here, buying every single dip about 1 year prior to the halving, I don't mind that at all. So what I will go ahead and do if we go down is I'm going to convert this bot at that point to a spot position. So how do I do that? Well, if you look at this bot, you click on details here to the far right, you see the position the actual bot is holding right here. So at that point, I'm just gonna close this trade and I'm gonna buy the exact same position on my spot account. Okay, so that means that I'm just converting this leverage trade to a spot position. That is if we go down below this level. If we stay above it and just trade sideways here, again, the bot is going to print money using that volatility. But for the scenario, if we go down below this level, I will just convert that position to a spot position, as I showed you right here. Whatever the amount this bot is holding, I will just buy that as a spot position, as a long position, and close this trade. Same thing for BitGet, which I've set up with the same trading range. If we go down below this level, I buy whatever position my BitGet bot is holding. I buy that as a spot and close that position. So it makes a break-even trade. But the lower we go, I don't mind that, because if we go any lower here, that's going to be a big opportunity for the next cycle. I don't mind buying Bitcoin at these prices at all. So let me show you quickly how to set up these bots, because this is something I get a lot of questions about as well. But first I want to talk about this bot as well, because you can see that I've added a second bot. This is actually between 13,200 and 22,222. So that's basically in between this orange box down here at 13,000 and the same basically resistance level up here at this orange box here. So that's a much wider range. So it's this entire range. So this is more like a longer term bot. This is something I can easily let go for, I don't know, 6 months, because I do think that we're going to stay in this vicinity for quite a while, guys. So I could let this bot trade. If we go down here below this orange box at the 16,500, then this bot is gonna do wonders as well. So these two bots I have on OKX, they're kind of compensating for each other. So I may as well just let these two do their thing. I do think that's gonna work well over time here. Not financial advice, of course, but this is what I am doing. Now, let me show you how to set up these bots. The first thing you need is an OKX account. OKX is my favorite exchange. They have the best functionality, best security. Also, what they released is their balance here. Their on-chain balance is a crazy $6 billion. Only Binance, from what I've seen, have more in their cold storage here. So for as long as they have a lot of funds here, I would say this is pretty safe. That is just my own opinion. You are entitled to yours. But from a safety perspective, I do think that OKX is as safe as it gets out there. And again, we can verify this on the chain, which is very important. So the first thing you need is an OKX account. You are able to claim, actually right now, up to $30,000 in bonuses. So you can use this link right here. Alternatively, if you are not able to access OKX, you can use BitGet, which is also a exchange, which is very good, but it's available for most jurisdictions. So you can use this if you're not able to use OKX. Secondly, if you want to set up these bots, what you do is you go up to trade, you click contracts, you click perpetual swaps, you click trading bot right here. And of course, on the Bitcoin USDT perpetuals, select Bitcoin USDT, select trading bot, it will take you to this one. And then I have the bot set as neutral, which means it's gonna both short and long. You add the levels. Personally, I have 15,700 on one of the bots. And let's see here, if you click on the bot, you have 20,200. Add the number of grids. For me, I did 25 on this particular bot. You can use the leverage. Use how much, select how much money you want to trade with, and then you can click advanced. And I personally set a stop loss only at the upper range, because just like I said, if we go down, I am happy to convert that. I'm happy to hold that position and then just convert it to a spot position. But it's much more painful to have a short position and the Bitcoin price goes up, because yeah, it's just painful to see. That is why I add a stop loss to the upper range. So I add that stop loss on the upper range here at 20,222. So maybe you add that stop loss or take profit at 20,250 or so. You can see that on my particular bot, I have it at 20,405. So that's basically what you do, and you can click create. That would set up the bot. And then if you want to add also the second bot I have here, which is between 13,200 and 22,222, you just add the corresponding levels here and the amounts of grids and whichever levels you want to add, and then you just click add as well. For BitGet, it's basically the same thing. You just click on strategy trading, you click here futures, and then you click on futures grid trading, which is going to take you to this page. And then you click long or short. You cannot do neutral on BitGet, unfortunately, but you can do long or short. I would do long because, just like I said, if you go long, it's only going to long. If you do short, it's only going to short. And it's very painful to hold the position. You click on manual creation here on the long grid. You add the prices just like on the OKX bot. You add the prices, number of grids, and then you click advanced down here. You can add the stop loss and take profit if you want to do that. Choose the amount of funds you want to trade with, and then you just click create strategy. This bot I have on OKX is currently set up with the same parameters as this one, 15,700 and 20,200. So now that I have showed you how I am trading, my strategy for trading, my bot settings, exactly how to set them up as well, I want to talk about why I believe that we are heading towards a little bit better times than what most people actually believe. I think that a lot of people, and of course right now we're in the midst of the FTX chaos, a lot of people are bearish, but people were very bearish prior to that as well. Now, what I want to show you is the CPI, and this is the inflation rate. And this is actually something that a lot of people are watching right now, because we know that the Fed are watching these numbers. And if we see continuation of the inflation rate going up or inflation going up, the Fed are going to be harder on the market. The Fed are going to increase the interest rates. But how this is calculated is actually as a comparison to the year prior to what we saw. So basically, if you look here in January of 2021, which is 1.4, we had an inflation rate of 1.4%. And if you look at the year after, 2022, we had 7.5%. So what this means is that we had 7.5% compared to the number we had here in 2021. So this becomes very interesting because we have had a couple of months with high inflation recently. So the inflation really started to accelerate here, somewhere like in October, November, and in December, right? So we saw an acceleration of the inflation. But what this means is that if we're gonna have, let's say here in November and December, if we're gonna have like 8%, well, we are already coming from high inflation the year prior to that. Now, if we would have had like 1 or 2%, just like you saw right here, then it's much easier to get a high number the year after. But if you already had, if you're comparing to a high level already, which we are right now, we're going into November, we're going into December, where last year we had 6.8, we had 7.0. And I don't think it's likely that we're gonna have super high inflation here because energy prices are going down, the rates have gone up, so people are not spending as much, and we already are coming from high numbers. So I do think that the CPI data, the inflation numbers, are going to start to come down since we're comparing to already high numbers we had previously. And also, if you look at next year, 2023, like in January, we are going to be comparing January of 2023 to an already high number of 7.5, and February to 7.9, March of 8.5. So I do think the inflation rate is going to come down significantly at the beginning of next year, which brings us to a couple of other charts. This is the yield curve inversions. So what this shows us is a metric which a lot of people are fearful of, and that is the yield curve. Usually when you see a yield curve inversion, you usually do see some nasty losses across the board. Now, we did have a yield curve inversion here in August, and on average, we see an 11% drawdown. But for us in crypto, that is nothing, but we have seen much deeper drawdowns than that. But if we look at and that's, by the way, for traditional markets. So let's actually look at traditional markets. So from August, how much have we actually gone down? Well, we have gone down from the 16th of August. We are already right now down 9%. And at the bottom, we were down 18%. So with that in mind, we have already had a bigger drawdown than you usually see on the yield curve inversion. So for everyone who are trading this yield curve inversion, we have already had that loss happen. Let's continue. Another thing I want to show you is that usually during the last year of the presidential cycle, we do have massive rallies in the stock markets. So this is also lining up with the trade I showed you right here. If the stock markets are gonna do well this year, that leads perfectly into the next halving for Bitcoin to then take the spotlight. And what I need to show you right here is that depending on if you have selected a Democrat or Republican, or on average, the gray line here in between, the stock market has always gone up tremendously from month 36 to month 48, which is the last year of the election. And we are coming up on that for Biden, guys. So this is actually reinforcing my thesis. That's not all. If you compare the stock market to something that a lot of people are doing, they're comparing this stock market right now to 1943 and 1949, where we went sideways for multiple years. But look at this. This is mirroring, actually, apart from the COVID crash, it's mirroring 1943 almost perfectly here. Okay, so it's mirroring so far very, very nicely. Now look, we went sideways for quite a bit here. Look, at 1947, we were at a price point in which we were also at 1948 and 1949. So for a couple of years, we went sideways here, which is, just like I showed you, something that I don't think is going to happen for crypto because crypto is much faster. But if we go sideways, we still have swings to the up and to the downside. And that is where this bot is going to do the magic. Another thing I want to show you is that the Fed always says that they are going to tighten. The Fed always says that they are going to roll off assets off of their balance sheet. What ends up happening is that they always end up printing even more money. So this is the Fed balance sheet. And what you got here in purple or red is the projection they communicated right here, that they were going to start to roll off assets off their balance sheet. But what happened? We didn't see that. Instead of going down like this, we started to see more money printing going up. Just like here, we started to see, they said that we were going to start rolling off assets off the balance sheet. We were going to go down. Instead, we went up. Here, they started to try to get rid of some of their assets off the balance sheet. They said that we were going to go down, but we went up. Same thing here. They tried to roll something off, but then, of course, COVID and the rest is history. So no matter if you think that this time is different, just understand that at the end of the day, the Fed only has one tool at their disposal. And that is to two tools. That's either to lower and increase interest rates, and it is to print money. So these are the weapons they have, and they always resort to printing money eventually. Do we think that this time is going to be different? Maybe it's going to be a little bit different, but at the end, they're always going to start printing money again. It's only a matter of time. This is what history has been showing us. And people are pricing in a 0.5% interest rate hike for the month of the December meeting. And I do think that that is probably valid. I do think we could see a 0.5% interest rate hike, but then I do think that they might actually start to not increase the rate hikes. I mean, if my thesis is correct, that inflation is indeed starting to come down, then they would just leave the interest rate at that point. We would not see more rate increases, and that would be good for the markets. The market would take that as a step. Now, is that particular rally we would see going to be sustained? That's yet to be seen, but we can only take one step at a time. Also, really, they cannot increase the interest rates any more than what they already have done. Like, if they continue to increase the interest rates, people are going to get wrecked. I mean, the interest, like the debt that people have right now in America is much higher than we had previously when they've been wanting to increase interest rates. Look at this. In 2004, we had a housing debt of 6.17 trillion. Right now, that debt is almost double. Also, the non-housing debt was 2 trillion. Now we have that more than double here. So for those people who think that the Fed are going to go back to like 8%, 12%, 10%, whatever it may be, that is not going to happen because the entire society would collapse at that point. So we should be close to a potential halting or pivot from the Fed. If we go back to Bitcoin for a while, this FTX crash has of course stained the reputation of crypto exchanges in general. Now, most people, they are wary of exchanges right now, and you can see that people are withdrawing Bitcoin from exchanges like crazy. In fact, we haven't been this low in Bitcoin supply on exchanges since 2018, beginning of 2018 actually. So people have been withdrawing like crazy, which is going to eventually lead into a liquidity crunch for Bitcoin. When people really start buying Bitcoin, which I do think is gonna happen sooner rather than later, there's not that much Bitcoin left on the exchanges to be bought. On another note, I do think more and more people are getting their interest up for Bitcoin in particular and crypto. Now, yes, the FTX drama, that's a bit of a stain, but Bitcoin is still functioning as good as it has always done. It's still 10-minute blocks. It's still censorship resistance. It's still unconfiscatable. So Bitcoin is still doing a fantastic job. And especially now with inflation, especially now with the political climate and whatnot, people are starting to take note of crypto and Bitcoin in particular. And people are getting interested in how monetary policies actually work. And if you just think about how many people entered the stock market last year or the last couple of years, how many of your friends started to trade on the stock market the last couple of years? These guys have started to trade stocks. They are going to start to get interest for Bitcoin as well. It's a natural thing to do. You go from nothing, you go to trading stocks, you go to trading crypto. So Bitcoin adoption is just going to continue to spread. Now, with that said, just like I said, we're in the middle of a chaos right now with FTX. We are yet to see the contagion. Also, we're going to have massive regulation. We're going to have a lot of black swan events happening, guys. We're going to have regulation come down hard on crypto. That is something I am 100% sure about. And we do not know what's going to come. Are we going to have a nuclear war? There are many factors to consider. And all of these factors are going to lead into a short-term crash for Bitcoin. This is something I know. But we just have to understand that these X factors actually are part of this market and they are going to happen. This is why we are in crypto. We want to have the massive gains, but then we also need to understand that this is an unregulated market and we are going to have for the next few years a lot of regulation, and that could affect the price negatively short term. So we need to be wary of that. But this is why we have a long-term strategy as well. This is why we are not looking at the price only in the short term. We know that we have these X factors, and so that's that. One thing I want to show you is a short clip from Mark Yusko, who is an American investor and hedge fund manager. He makes the case for why now could be a good time to buy Bitcoin and what he is looking out for in the future.
So the 4-year cycle is alive and well, and the next halving occurs January, February of 2024. The first investors come in because they look at the value and then they look at the price and say, well, the price is below the fair value. So if the value of the network is around 20,000 and the price is 19,000, I'm going to buy that. Well, then what happens is people look at the halving and say, well, if the block rewards get cut in half to 3.25 from 6.25 to 3.125 from 6.25, then the price has got to double-ish in order for the miners to continue to make money.
Bitcoin to $250,000 in the next 3 to 5 years, if I remember correctly. So can you go through this price prediction and tell us how this is going to play out?
No, it's a great question. So look, the 250 comes from simple math. It's 3 to 5 years, and it comes from simple math that if we take gold, the gold value in the world is 10 trillion, but half of that doesn't count, right? It's chalices and jewelry and stuff that you can't really use. The other half is the monetary value, the bricks and bars that sit in people's, accounts and, Fort Knox and, Swiss bank vaults and all that stuff. That's 5 trillion. 5 trillion, okay? If you think about 21 million Bitcoin is probably less than that. You do that math and you get a 250K number. Okay, that works for me. So gold equivalence is about 250K. When would that happen? Look, if the next halving we add another zero, so we go from 10,000 to 100,000, and then we get that speculative bubble in 2024, 2025 that pushes us into speculation, could we get to 250? 200 is probably more likely, but 250 is possible.